Sorry about that, guys. All right, so the system again, structure, supply and demand zones and confirmations, the direction. We use, whatever phase we see. We see an uptrend. We see a downtrend. And then we see a range, okay? So let me just highlight this black. Let me change the color. And right now I'm just going over market structure, and I'm gonna go into detail on how that works. So, third, okay. So one's the uptrend. The second is the downtrend. The third. Okay. So range is pretty much it's the same thing as a consolidation, but I just call it range. Other than that, this is what we see in the markets, the phases. We know that the uptrend, what does it do? It makes these higher highs and these higher lows. The downtrend makes lower lows and lower highs. And then the range pretty much just makes equal highs and equal lows. All right. So let's just say that looking at number one, we see the uptrend. Based off the uptrend, what does it have to do for it to continue going up? It has to break this high. That's correct. But other than that, let's just say that 1, 2, and 3, we're just talking about a daily time frame. Okay. So let's just say everything 1, 2, and 3 on a daily time frame, because pretty much when you look at structure or just overall any stock, you have to look at the bigger picture. Okay, you have to look at the bigger picture and see what it's telling you. Think of a stock. Let's just say example Apple or AMD or SPY. Let's just say example SPY. Let's look at the higher time frame first to read the direction to see if it's uptrending, downtrending, and ranging. Can you guys tell me what is SPY doing at the moment in the bigger picture?
Uptrend.
Right now, it's in the bigger picture is downtrending, but on a lower time frame, it's uptrending. That's correct. But on the bigger picture is downtrending. So we're technically we're bearish on the bigger picture. Okay. So like I said, when it comes to structure, it's always the first step on how we approach the markets, how we look at it, how we can read it, how we can identify it. And the first step is, to read the structure parts, and we have to see the direction. Okay. And once we read the direction, what do? Using the higher timeframes, you think of the timeframes like a tool for work. Think like a construction worker. What does he take to work? He takes tools to work to get the job done. So we use this platform, which is TradingView. Okay. We use this platform TradingView to see what the stock, to identify, to see the direction. Okay. So this system right here is pretty much, like I said, it's going to help you read the direction, the story, and build a bias. And you can find your supply and demand zones, and you can use the confirmations. So if you don't read structure, then there's no point of looking for supply and demand zones. There's no point of looking for confirmations. Okay. So all I'm doing right now is just trying to implement, in your mind, how structure works. And this is just how I view it. Like I said, on a daily picture on SPY, it's downtrending, making lower lows, lower highs. But think about how a lower time frame will look like. So think of SPY. What did it do this week? It was uptrending. And you can see it has two different stories from the bigger picture and the lower picture. Okay. So now that we see that everything that you see 1, 2, and 3 is on daily time frame, you can just see that if you look at any stock on a high time frame, it's easy to say that, oh yeah, it's uptrending. Oh yeah, it's downtrending. Oh yeah, it's ranging. But think about on the lower picture. It's going to look different, right? It's going to look different. It can tell you, oh, it's bullish. But on the bigger picture, it's bearish. So let's just go into one. So let's do this. So again, we're only talking about the daily time frame. You see this uptrend. So on this uptrend, what does it have to do? break this high. Okay. So think of how many days does it have to, run up to break that structure. Okay. So this is the higher high here. So the higher high here, higher low. So you can just see that this is still a daily time frame. Think of how many days it's going to make a high, how many days is going to, come down and make a higher low, and how many days it's going to take to make a higher high. Okay, so that's pretty much what when price breaks above the last high over here, then that's pretty much confirms that we can see a potential run up in the bigger picture. But all you got to do is wait until it makes a higher high, and we buy it at the higher low, correct? Because we want to buy it at a discount. We want to buy it at a discount price. We don't buy it. We don't want to buy it at the higher high, because if you buy it at the higher high, what's going to happen? It can run right back down. Okay. So we want to buy it at discounted prices. So all this whole uptrend right here, since I'm talking about daily time frame, it can work on a 4 hour, it can work on a 2 hour, it can work on a 1 hour, it can be a 5-minute chart, it can be a 1-minute chart. It's the same thing. Nothing changes. Structure is structure. Okay. But for me to, to learn about market structure and all this stuff is to look at the bigger picture. Because if you let's just say after this session and stuff, and you start charting on your own, I don't expect you to, I wouldn't recommend you to look at the lower timeframes. Because if you look at the lower timeframes, it's going to be very confusing. So you have to look at, I would say, the daily, the weekly, and the monthly. Okay, those are the timeframes I would use to read the bigger picture. Okay, so again, back into this. So all we're really doing is, we're reading the direction. We know the direction is just making higher highs, higher lows, higher highs, and higher lows, and then higher highs. But how to read the story? To read the story is pretty much, we know that this is on a daily picture, but think about on a lower time frame. I don't think we're going to find entries and exits on daily time frames, are we? No, we're not. All we're really doing is to read the direction, and for us to read the story, we have to play with the time frames. Okay, we have to play with the time frames. And when it comes to the story, what I mean by story, you have to see what's going on based off. You have to do the higher time frame analysis, and then you do the lower time frame analysis. Think of the people that's that they just focus on the 1 minute, the 5 minutes, the 10-minute charts, and they don't know what's going on in the bigger picture. They get stopped out. They get lost. Their entries and exits fail, or their supply and demand zones fail. Why? Because they did not read the bigger picture. So yeah, so since this is just made a higher high, higher low, higher high, but when it comes to the higher high, how can we participate either if it's down run or this run up? I want to participate in this run up. But let's just say that I want to go against the trend. If I want to go against the trend, then you have to see how you can enter into this higher high. So at this higher high to this higher low, what do you guys buy? Can you guys tell me, what do you guys buy from this higher high to this higher low?
Put or put.
Yeah, we buy a put, right? We buy a put, and how do we know that we can get into puts? We use the time frames. We use the time frames for what? To see the lower picture, to get into those puts. Okay. So now that this is fallen, where are we going to take it at? We're going to take it into, S&D zones around one of these areas here. So all you got to do is just find where, those unmitigated candles at, but we're going to talk about more supply and demand zones right after, going over market structure. But all I'm really doing is just try to implement in your mind how structure works. So now that this higher high is falling, you can participate in puts. But just know that when you go against the trend, just know that what is it trying to do on the long run? It's trying to go right back up. Okay. So now that we see this higher high to this higher low, we can see that's, it comes even lower. I mean, as long as price does not come below this, then we should be good for it to run up. And I'm gonna show you how that, happened with SPY this week, with AMD, with Microsoft, how we saw the reversal and how you could capture that whole 5,000% return. Okay. And so, like I said, it's very important to read the bigger picture, to read the story, treat these stocks like a book. When you read a book, you don't start in the middle, you don't start at the end, you start at the beginning. You want to know what the story is about, so start at page 1 and work your way through. And when you read a book, you flip through the pages. So think of this, when you go onto any stock now, that, look at the bigger picture, and then start from the bigger picture and work your way down. You want to see where you're sitting at. You don't want to buy calls at a higher high or in a distribution phase. Because if you buy calls in a distribution phase, then you're pretty much going to lose your whole money. This is why I said for us to participate in this uptrend, whatever time frame it is, daily, 1 hour, 5 minutes, or 1 minute charts, you want to buy it at a discounted price. Do not buy at the higher high, because if you buy calls at the higher high, pretty much, you can lose your whole money. You don't know if it could just run down again. Okay. So let's just say that we know that this whole uptrend is, it's running up, and we have demand zones. We have a demand zone. This is where you want to enter. We want to see the last down candle before the run up. So how would that look like? How would that look like inside of this? So let's just put something like this. That's my bearish candle based off of my chart on the left. So that's a bearish candle. And then what I want to see is a big candle, a momentum candle to the upside. Something like this. Okay. That's what I want to see. I want to see the last down candle before that move up, because you got to think about it. All this right here was responsible for that break of structure. I want price to come right back down into this demand zone. So yeah, I want price to come back down into this demand zone, because this is the last down before the impulse moved down. So they sold, smart money wise, they sold, and then they put a buy position in place. And what happened? We saw a big run up. This is the big run up right here. We saw that price just broke structure, and now price is coming right back down into this demand zone. Okay. Now that price comes back into that demand zone, what do we do? Do you guys buy right away when it comes into a demand zone? Yes or no?
No.
Wait for it to reject.
Yeah, wait for it to reject. And what confirmations can we use? We can use Wyckoff, we can use structure, or we can use candlesticks, or we can use indicators, whatever you want to use. All we're doing is looking at the structure first, okay? Because like I said, the structure is always step one. Do not go to a chart and just draw out support, resistance, supply and demand zones and start looking for confirmations. Do not do that. You have to read the structure. You have to read the story, build a bias, see what's going on. And how do we do that? Start with the higher timeframes and work your way down into the lower timeframes to see, what it's trying to tell you. Structure is going to be your best friend. I know that I'm showing you based off like this, a pattern, of just the uptrend, but think of how it would look on a chart or a candlestick chart. It's going to look different. It's not going to pretty much look like this. I wish it looked like this, but it's not. But all you got to do is just train your eyes. Train your eyes to set up right here, and now go onto a chart, and you will see it. Okay. So now that price just, did a higher high here, a higher low here. When it did a higher low here, we go long. That's it. Like I said, this can work on a daily time frame. This can work on a on a 1 hour, 30 minutes, 1 minute chart. It's the same concept. It does not change. Okay. But all I'm trying to say is to learn and practice market structure is start with the higher time frames, daily, weekly, and monthly. Don't forget. Okay. So again, I mean, downtrend. What is downtrend? Is telling us. We see that for this to continue going to the downside, what does it have to do? It has to break this low. And what are we applying? We're applying this system right here, the structure. First, before we start looking for supply and demand zones, before we start looking for confirmations, the structure is always step one. Okay. So now that this did a low here, establishes low here, price did what? A lower high. So this is a lower low. This is a lower high. So now that it did a lower high, price just drops. Okay. So think of it. So let's just say that this whole down run is now, let's just say, for example, since we already talked about this daily time frame, let's just say that we're looking at a 5-minute chart. Okay. So let's just say all this right here, this bearish structure is on a 5-minute time frame. So on this 5-minute time frame, we see that this is making a new lower low. So let me make that better for you guys. Lower low, and we have a lower high. Okay. So now that we have that lower high, what happened? Price just dropped through. Price just dropped through, and what? It made what? A new low. When it made a new low, now that is pretty much your target. What you're gonna wait for, let's just say that price made a new low here and price comes right back up. As long as price does not break above this, we should be good for puts. We should be good for puts because we don't want it to break above this, because if it breaks above this, that's a break of a structure and it's gonna run right back up. Because all I'm looking at, that this made a lower low, this made a lower high, price dropped, made a new lower low. And I'm not gonna go for the first break. If you go for the first break of a support level, or just for the new low or something, or just based off the momentum, what's gonna happen? Price is gonna reverse right back up on you. Did that happen to you guys? I say when you went for a break below here, price reversed right back up on you. Did that happen to you guys?
Yes.
Yeah. That happened to me so many times. That happened to me so many times, and I burnt what? 10K. 10K just by doing that. And I had to learn the hard way. I had to learn the hard way, and what you got to do to avoid this, you want price to come right back to you. Okay. So like I said, we're only looking at the structure parts. We know that this is a downtrend, and now that this made a lower low, price runs right back up. And what do we look for? We look for our supply and demand zone. So since this is downtrending, what are we looking for? Do we look for demand or do we look for supply?
Supply.
Correct. We look for supply. We look for supply and we use it for our entry. Okay. So now that we're looking for our entry, where are we going to draw it at? Let's just say right here. Like I said, I'll talk more about supply and demand zones after structure, and I'll tell you how we can look at it on chart. But right now we're just, pretty much just talking about structure only. So now that price did a low here, price is now coming into here, and then now what? It's gonna reject. how do we know it's going to reject? We already had the confirmation of this break of a structure here. That's one, okay? The other one is the liquidity that's sitting at this lower low. Boom. So that penguin's liquidity. So now that's price establishes lower low. Think of how many people are trying to buy calls, and think of they have stop loss on that run up. That's pretty much a mixture of dumb money and retail money thinking, oh, we're flying up, we're running up, let's buy calls. So if you buy, did that happen to you before? I was saying when it broke below and you start seeing momentum, did you start buying calls? Did that happen to you guys before?
Yes.
Yeah, you know, I mean, like I said, you have to read the structure. We have to see it. You have to see that it's making lower lows and lower highs. So since this is making lower lows, we're just waiting, me and you, or everyone in this chat, we're waiting for price to come back into our supply zone, because supply zones, think of the supply zone like a ceiling. When you hit a ceiling, you reject, you fall right back down. Okay, and that's all we're looking for. So now that price comes right back up into this supply zone, we use it for our entries and exits. We go short. There you go. That's our supply zone. Price comes into that supply zone. And where are we going to target? Do you know where we're going to target? Are we going to target the penguin, or are we going to target the new low?
The new low.
No, we're not going to target the new low. We're going to target the penguin. Yeah,
Oh.
why are we going to target the penguin? Because what can happen? Price can come right back here and just run up like this. You have to be very careful, because honestly, I can't tell you if this is for sure going to, see the whole, or make a new low. We don't know. This is why we have stop loss in place. This is why we have break evens. So when I go onto the chat and I say SL, that's stop loss. Or when I say BE, that's break even. Okay. So now that, it did a low here, price is now rejected here and it confirmed. How do we get the confirmation? We can use Wyckoff, we can use structure, candlesticks, or indicators, right? So now that, that is the rejection off that area here. Now what happened? Now that this is a lower high now. That is their lower high. Bingo. Why is this our lower high? Because it did not break above this previous one. It stopped right here and then it dropped. So let's just say that price is now broken below this. And you're wondering, how can I get into puts if I miss this supply zone? Where you can go for puts is that we wait for the drop, we see how low it can go, and we're gonna wait for price to run right back up with momentum if it does want to, and we're gonna target another supply zone. So since this supply zone has already been used, we don't use this supply zone no more. This cancels out. Why does that supply zone cancel out? Because it's already been mitigated. It's already been mitigated and there's no sell orders there. So now we can find supply zones here. We can find it here. And I'm gonna show you how we can spot it on a charts. Here, I mean, whatever you see, I mean, all you gotta do is find where those unmitigated candles are at. So now that price does this, and let's just say it does this, you could just see that this one right here, you had a supply zone here. So let me delete this one. So you had a supply zone here, but it failed. It failed to hit it, and it just sliced through. If price just sliced through that supply zone, this is invalid. This is invalid, and this is still what? Can you guys tell me what this is? This uptrend, is it bullish, right? Correct. What is it doing? It's
Bullish.
making higher highs and higher lows, correct? There's the little demand zones inside those areas there. So remember, this is still a 5-minute chart. Think of how a 1-minute chart looks like. It looks bullish. It looks bullish on 1-minute charts. Demand, demand, demand. I mean, all that is demand zones. But we're here to, go for the main objective is to go shorts. I mean, this is why I say you can play both sides. I say it in the chat, you can play both sides. The market is fractal. But just know that on this 5-minute chart, we're bearish. But you have to be very careful on this 5-minute chart when you go against the trend. You can still make money going against the trend, but you have to be very careful because you have to realize what is the main objective. The main objective is for us to go short. Okay. So now that price is running up, we're going to target everyone here that's buying it up. Because what? This is dumb money or retail money thinking, oh, we're running up. We're going to see the moon again when we're not. Why are we not going to see the moon again? Because we broke structure. We broke those protected lows right here. Look at this downfall. We're bearish. Market structure, we move in waves. When it moves in waves, we want to see how we can enter into that wave and, flow with the wave. We want to be like water. That's all we're really doing. We want to buy at the lower highs. Lower high, lower high, lower high. This is how the market moves. If this is a 5-minute chart, if this is a 30-minute chart, is it a 1 hour, 4 hour, daily? Does not matter. Structure is structure. Nothing changes. You can make money on looking at the bigger picture for people that swing. You can make money in day trading, people that look at 15-minute charts or maybe the hour. People can make money, when scalping. Everyone can make money. It's all about what you're looking for. So the system that I teach, it's honestly, it can generate you a nice 6 figures if you play the cards right. That's it. And this is what I teach my students. I teach them 1, 2, and 3. It's all about reading the structure first before you look for your supply and demand zones. Read the story, flip through the pages, play with the time frames. What did I say? You have to look at the higher time frames and then work your way down. I myself, I don't look at the higher time frames no more, or I don't look at it, every day because I already know what the market's at right now. But for you to guys, to practice, to learn, look at the higher time frames, and then now you can jump onto the lower time frames because every time frame now makes sense. You read the book. Pick your top 3 books. When I mean your top 3 books, your top 3 stocks. SPY, Apple, AMD is my favorites. Maybe sometimes Tesla. See where you're currently sitting in the bigger picture. And then work your way down. Because if you play the same stock over and over and over, you don't have to look at the higher time frames constantly. So, but yeah, how you guys loving this this session so far? We still got a lot to cover. Still have a lot to cover. Great, loving it. Yeah, and we still got to look at a chart too. It's amazing. Yeah, loving it, enjoying it. Yep. I mean, we'll talk more about market structure before we dive into then supply and demand zones and then confirmations. Yeah, very helpful. And did you guys take the boot camp at all? I think majority of people, you guys took the boot camp, right? You didn't? I'm new. Okay, yeah, that's good. No, I did. I mean, I believe there's an upcoming boot camp. Nothing confirmed yet. Can't tell you exactly when, but should be sometime soon. But other than that, this is, like I said, I'm just teaching you guys, the system, but I'm gonna break it down even more, and I'm just showing you a glimpse of, how structure pretty much works. Okay, so let's scroll down and let's come down even lower. Okay. So I'm gonna go over again, you know, the uptrend, but I'm pretty much gonna show you how we can swing trade, how we can day trade, and how we can scalp, and how we can approach the markets. And then I'm gonna talk more about supply and demand zones, and then we'll jump onto a chart. Because structure, like I said, it's something that we have to pretty much, you know, learn, use for supply and demand zones and confirmations to work. Someone said, I did, you and Jerry. Yeah, me and Jerry, pretty much in the talks, but, you know, nothing confirmed yet. And yeah, so we will receive the recording tonight. Yes, you will receive the recording. The recording will be on the Google Drive, and I'll send that link out when it's ready into your guys' emails. Okay. So I've been hoping for a Jerry and RZ bootcamp since I joined. Yeah, we're working on it, but you know, nothing confirmed. Can't confirm the dates. But yeah, no rush. But we're trying to, you know, get it going. Okay. So again, this is what we see. Okay, this is what we see, and we see the uptrend. So let's just say that this whole uptrend, I'm gonna go on a daily. So the black will be a daily, and then I'm gonna play with a time frame. Let's just say that's a 1 hour, time frame. Are boot camps in person? No, they're Zoom. They're via Zoom. So let me just do this and just, you know, clear some things up when it comes to market structure. So yeah. So okay. So we know that the daily time frame, let's just say you're doing your higher time frame analysis. We see that it's uptrending, but what do? We read the story. Okay. So now let's just say that we know what the daily time frame is doing. We know the direction. Now let's jump into a 1 hour chart. So on a 1 hour chart, it's going to start looking like this. That's what we see when we lower our time frames. Okay. So there you go. So you guys tell me this: when you look at the higher time frame, it's easy to tell how it's uptrending, but you guys get confused when it goes on the lower time frame.
Yeah.
Right. It's, you know, people start getting confused. That's in they're trying to fight the whole trend. They get burnt out. They lose money, and like I said, we want to flow with the wave, okay? But just know on a daily time frame it's bullish, but on a 1 hour time frame it tells you something different. But just know that this higher upward trend, these lows cannot be broken. These lows cannot be broken. So that, yeah, that's the part that throws me off. Yeah, so I'm gonna pretty much, you know, go over it step by step. So like I said, the daily time frame, it's bullish, but on a 1 hour time frame, it's bearish on some parts. Because if you look at a daily time frame candle, right, a candle, let's just say a bullish candle. So let's just say this candle right here is a daily time frame candle. Okay, it's a daily of price action. So what do we do as traders? We want to dissect that candle. What do I mean when based off dissecting? We want to open it up. When we open up that candle, we see more candlesticks. How do we do that? We lower our time frames. We want to see what happened in this, what caused this whole bullish candle. Okay, so now that this whole uptrend here, remember how many days is it going to take for it to come right back up, come right back down. And like I said, this is just waves. we want to participate in this given movement. So now that this whole 1 hour, we see what? So let's just say that from this point, it's Monday to Friday. And then from that Friday, and now let's just say that Monday to Friday here. And then from that Friday, brand new week, the following week, it's a Monday to a Friday. That's what? Week 1, we're bullish. 2, we were bearish from Monday to Friday, okay? And then from week 3, we're back to bullish. That's almost a full month of just what? Upward movement, downward movement, upward movements, okay? That's week 1, a bullish, week 2, a bearish, a few other week, bullish again. But just don't forget how the bigger picture looks like. We're uptrending, okay? But right now we're only dissecting those that structure into a 1 hour time frame. So let's delete this. Oh, not that. So let's just talk about week 1 first. So from on a Monday to a Friday, we saw what? A run up. There you go. That's bullish. Okay. That's bullish run. But look at the next day, we're bearish. Because how many hours are in a chart or in a stock? In a stock day? We have 6-7 hours, right? So around there. And like I said, every day is different. On Monday we might be bullish. On a Tuesday, we're bearish. The next day, we're bullish again. There you go. So think of the green bullish and the red bearish, and then yeah. So this is just going from Monday to a Friday. That's it. There you go. So on Monday we're bullish. On a Tuesday we're bearish. On a Wednesday we're bullish again. On a Thursday we're bearish, and then on a Friday we're bullish. Okay. So that's only on a 1 hour time frame. So you see how when you go on a lower time frame, it's still the same thing, but how can we participate for puts? Is this right here. We need the confirmation of this break structure right over here. So now that this right here did a last high, did price ever come back into that high yet? No, it did not. Price made a new low. You just see that this broke structure did a lower low here, lower high, lower low, lower high, and then a lower low. But don't forget the bigger picture. The bigger picture is bullish. And this is why I say in this uptrend, we can participate in both sides of the market. We can get puts here. We can get calls here. We can get puts here, calls here, puts here, calls here. And I'm just explaining how you can swing trade, how you can swing trade in this uptrend movements, how you can participate for puts and calls, puts and calls, puts and calls. Okay. So now that, we saw the rundown, price did one more bullish run. So yeah, that was red. This was supposed to be green. So price did one more bullish one before, so right after it broke below that low. Now it does a new low, a lower high, a low, lower high, low. But how do we know that this is gonna run right back up? We need this lower high to be broken. So let me move that. This right here. We see what's lower low, lower high, lower low, breakthrough. That broke structure. Because on a downtrend, this is bearish structure. lower low, lower high, broke above. That is your break of a structure right there. BOS. When it comes to that BOS, we made a new high. So this whole downtrend, what did it do? It failed to make lower lows and at lower highs. That's what it failed to do. So now that we failed to do that, what happened? We saw a change. That's where people say change of character, or you could say break of a structure. But when it comes to change of a character, where people say that change of character is pretty much the same thing as a break of a structure. When someone says change of character, just think of it like a marketing term of a BOS, because that's pretty much it's the same thing, really. So I just say BOS. Okay, so that's a break of a structure, and then now since that broke structure, price can't come below this here. If it comes below here, then it's going to continue going down. So now they made a new high here because that's a higher high, and this was a lower high. Price broke above, and now we're going to switch direction. This made a higher high. Price comes right back down. As you say, comes right back down, and then it runs right back up. This is how we capture the reversal right back up, because this was downtrending. Remember, downtrending, and we saw what? An impulse move. And then what happened? Price did a higher high, and it made a what? A higher low. Because this was the lower low, price never came back into this line here. And look where it stopped. It ran right back up. And that's what it did right here. Remember, week 1, we were bullish. And then the week 2, we were bearish. And then look at week 3, bullish again to the upside. Because remember, we're looking at a daily picture on the daily run, on the long-term one, we're bullish. But how, as us scalpers, day traders, or maybe just short-term swingers, how can we participate in this? By applying this system right here. The direction, the structure, which is pretty much we're reading the direction, we're reading the story, and we're building a bias. So now that this is running up now, you can see that this is higher high. For this to continue going up, what does it have to do? Do you guys know? What does it have to do for it to continue going high? Or continue going up? Create new highs, correct. They have to create new highs. It has to do this. Break structure for it to come right back down. And where do you want to buy when it runs up? Where do you want to buy? Where do you want to buy calls at since it's uptrending? Yeah, the new low, but the higher low. Okay. We don't want it to fall below here. We don't want it to break through. We want to see it run right back up. And we buy it at those demand zones. Think of those demand zones like trampolines. When you jump on a trampoline, we see that run right back up. Does this and then runs right back up, break the structure. Okay. This is how we get into that run up. Because if you buy at a higher high, it can just reverse right back up on you. Because you don't want to buy calls at a higher high because it's going to reverse. You're going to be negative. So now that price is making new highs, look at this. Higher highs, higher lows, higher lows, higher lows, higher lows. That is the higher low here. But what happened? I know that price broke structure here that did a new high, but what happened? This right here was responsible for that run down. So this last top was responsible. So this right here was responsible for that breakthrough, and that broke structure right there. You can see that we don't go for the first break, we go for the retracement. And for us to get into this downtrend, we can't let price come above that resistance. This right here, we can't let price come right back up into here. Because if it does, and if it breaks above, that's going to continue going up. And that's what we don't want. We want price to make a new low, which it did right here. And we want price to come and make a lower high. We want price to come make a lower high and then fall again. And then, I mean, it can still come up to here, to this high here, but it has to reject. It can't break above. It has to come and reject. And this is how we participate for what? For puts. For puts, because we're downtrending. And this is how we can participate in all these areas here in this uptrend. And you can just see that when it comes to structure, it's more than just higher highs and higher lows. Now imagine this, everything that I just drew out. Think of how it will look on a candlestick chart. It look pretty much scary, right? It would pretty much look confusing. But all you got to do is just train your eyes to see this. Because we already know in the bigger picture is bullish, but on the lower time frame, it's going to tell us something different. Bearish, bullish, bearish, bullish, bearish, bullish. And now let's think of how this will look on a 15-minute chart, this whole uptrend. So now let's just say the green is going to be a 15-minute time frame. So now the 15-minute time frame is going to be something like this. So much more structure. And that's, you know, it's going to start looking confusing if you don't read the bigger picture. Who uses 15-minute time frame? Scalpers and day traders. Who uses the 1-hour time frame? Swing traders. Now think of how a 1 minute will look like. The 1 minute will have a lot of details, more noise. The more you narrow down your time frames, the more noise you get. But just don't forget what the market is doing on the bigger picture. It's making higher lows, higher lows, higher lows. Smart money gets involved in all these areas. So everywhere you see on this run up, people are losing money. People are losing money here. 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 And people are losing money here. Everywhere you see, this is how the market moves. This is how the composite man, aka the banks, they make their money. They trick you. They manipulate you. They fake you out. They fake you out. And this is how they move. This is how they profit. They profit off your losses. And when they profit off your losses, you know, they're pretty much, yeah, they're making the money. And this is, like I said, this whole system right here is going to find the footprints of smart money, meaning banks, because banks, they control the markets. Hedge funds, banks, or whatever institutions, they control the markets, and we want to flow with them. We don't want to go against them. We don't want to trade with retail. We don't go based off breakouts, because when it go based off breakout trades, let's just say those patterns or something, then you know you're going to be the liquidity. You can get faked out. We don't go based off breakouts. We go off of this right here. So someone said, what type of trader do you consider yourself to be? I can be all three, but mostly I'm just a scalper or I'm a day trader. I might swing something here and there, but mostly a scalper and day trader. But this is just how I would look at these markets. Is we're only looking at one, which is the direction, the structure. And then the second step is supply and demand zones. That's it. And do you guys have any questions? I'll pause for a little bit. And you guys can ask me any questions.
Hey, RZ, just one question I had, I think it goes back to Nez's webinar. Is there was a situation where structure was invalidated? It didn't quite make a lower low. So I'm just wondering if it's invalidated on a different time frame. Do we just skip past it, or how do you look at those situations?
So you could either skip past through it or just wait, because you know it could just be liquidity. It could be just liquidity forming, and you know all I'm looking is for a structural break, and that's it. For my structural break, and you know I just want to see if it's going to make a new high or a new low, and then you know I can find my supply and demand zones where those unmitigated areas at, and that's it.
Thank you.
Yeah, no problem. So someone said you recommend looking at the higher time frames to train your eyes to see the structure before looking at the lower time frame. Yes, correct. Look at the bigger picture just to see what it's doing. And then when you read the bigger picture, you can work your way down. You're reading the book and it's going to help you what you're looking for. Whatever, if you're a scalper, a day trader, or a swinger. Okay. But yeah, is there any other questions before I move on? Yeah, no problem. Go ahead.
Yeah, so I'm still a little bit new. So I was just wondering, are you doing all of this, like looking at the structure, S&D zones and confirmation? Are you doing that like live trading, or are you doing that like the night before or Sunday and planning your whole week out? Like, I think that's what I'm confused on.
Yeah, I mean, you can do it the night before, you can do it the morning of, you can do it the opening, you can do the intraday, you can do whatever, you know. It's I mean, it works. I mean, I can show you on one of the I was going to show you my Discord in a bit on how I called out SPY for calls at a demand zone before price reached at that area, and see how everything played out. And then when price just bounced and it ran up, I think I alerted it like 15 minutes before the market opened. But yeah, I mean, you can see it's you can have your levels set up the night before. You can change your levels here and there when it comes to pre-markets. Yeah.
Okay, to follow up on that. So let's say I want to look at it the night before. Basically what I'm doing is I'm going to the daily time frame. I'm seeing the trend, and then I'm looking at the hourly time frame. But the daily time frame, I noticed that it goes back very far. So where would I start if I want to trade? If I'm trying to do trades for the night before, I'm planning for the night before. Where do I stop on the dates, and where do I start?
Yeah, so how I would do that is look at the daily time frame first and then work your way down. Dissect that daily candle, see what's going on throughout that week based off last week's and this week's. And then what you do is you work your way down into an hourly time frame, and then a 15-minute chart, 5-minute chart, and then a 1-minute chart. So once you do that, it's all going to make sense, but just don't look at the lower time frames. Look at the 1 hour. So start with the daily, jump into the 1 hour, to the 15 minutes, then to the 5 minutes, and then 1 minute. Okay, and that's what I would do. As in, if I was looking to day trade or just trying to, you know, get into a play for the next day. Find your levels, read the story. Okay. Yeah, no problem. Do you use pre-market for this, especially day trading? Yeah, you can use pre-markets, but you don't really need pre-market, honestly. You don't. You can just do it because I myself, sometimes I just do it without the extended hours. I do it without the pre-market levels. But yeah, you can use pre-market levels if you want to. You know, nothing changes. So yeah, let me just show you. Yeah, no problem. So let me just show you over here. Can you guys see my Discord? Say yes if you can.
Yes.
Okay. So I told everybody, watch SPY here. We can just see that's what happened. So let me, I think this was already 15 minutes in, or yeah, 20 minutes in at the open. And I'm not going to trade. I'm not going to trade at the open if I see this whole gap up and I put a no gap candle indicator and it just filled it in. Okay, because honestly, it's just a big momentum candle. With that big momentum candle, what did it do? You see the bearish structure right here. You see how this is making lows, 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 and lows? And look at this. This is the last lower high. Price dropped, lower low, impulse moved to the upside. And I told everybody, calls at demand zones with confirmation. Okay, so now that price gave the momentum up, it did a new high right here, and we're going to target that later. Okay, and all we really, is pretty much waiting for price to come into that level there. Because remember, we saw bearish structure, we saw the movement up, it broke this structure. When it broke that structure, we're waiting for price to come into our demand zone. That's it. And then we see that run right back up. Okay. So now let me show you the update of this one. We know that this was running up, running down, running down, running down. You just see that I have the resistance right there. Price just broke above and has a whole gap. So when you see that whole gap, think of that gap like an imbalance, which it is, because that's a big buy order. Because who can move the market like that? Not me, not any individual, not retail. Banks, correct? Banks. They have the money to push that market up like that. So think of the people trying to buy calls, running up, running up, running up. But I myself, I'm not going to do that. I'm not going to buy the highest high or the higher high. I'm going to wait for price to come to me. Never chase a trade. Let the price come to you. And when price comes to you into your demand zone, you attack. That's where we attack. But when it comes into a demand zone, we wait for the confirmation. So let's go back into the Discord and let's just show the updates. And here you go. I said SPY is reaching. Easy play if you play puts to it. Like I said, you can go against the trend, but just note that the main objective is to buy calls and go long. But look at this: lower lows, lower lows, lower highs, lows, lower highs. You just see what? Bearish structure, bearish structure. So since this just dropped here, that gave it an impulse move down. Let me see if I can get a put. Let me see if if price comes right back up into my level and I can go for a put. So you can see that what happened. Price dropped. We saw the impulse move to the downside. Are you guys going to buy puts right away if this breaks this low here? Are you guys going to buy puts? You tell me yes or no.
No.
No. We don't do that. Okay. We're not breakout traders. We're not breakout traders because we have a system. Okay. The system is what? The structure. We see bearish structure. That's correct. But the second step is supply and demand zones. So now that price just broke this low here, I want price to run right back up into my supply zone. This is the last up before the impulse move down. This is your supply zone. Okay. So now that price is gonna, consolidate here, or up here, and then drop. That's what we want to wait for. That's how we can find an entry and we could take it into that demand zone. How did this make it valid? Because this had an imbalance. So when it comes to that supply zone, it has to have an imbalance or a mitigated area right here, here to here. That's all imbalance. Because that's a big sell order. Don't you guys think that's a big sell order? Yes or no?
Yes.
Yes, that's a big sell order. That's a big sell order. Think of over here. Look at that big sell order here. Look at this big sell order here. Sellers are controlled. The banks are what? They're trying to manipulate you. And look, the people are trying to buy calls here. They failed. Yeah, because they failed. Run down. They try to buy here. They failed. Everywhere you see here, they failed. But just know that we already had the confirmation over here because it did a break of a structure right there. It did a new high. When it did a new high, price is now looking what's bearish to mitigate this gap right here. Mitigating meaning they can close their positions and they can buy more or whatever they want to do. Okay, they're fixing that gap, that imbalance. But price comes back into that demand zone and we wait for the confirmation because this is the main objective, is to go long. But if you want to go against the trend, you can run right back up and then you can buy puts and go against it. Would that be an order block? Yeah. Yeah, pretty much. I just pretty much goes based off supply and demand zones. So now that this right here is your supply, we're just waiting for price comes here and then reject. So let's look at the update. And I kept updating throughout that day. And like I said, all this right here is intraday, intraday. And this was just, what is it? I didn't even look at the previous nights. I just looked at right at the open and I just saw, price shot up. And I was just alerting everybody how this was just playing out. Look at this. Price ran back up into the supply zone. price dropped. There you go. This is our entry, because you can see that when price broke below this support, price made a new low. This is our liquidity where we're going to target. And then if you enter into here, price just dropped. You see how you can get into that retracement right back up, because you can see that if you play the breakouts, it's going to reverse right back up on you. Do not go for the breakouts, because if you see any admin play or plays of the week, those are breakout trades. Those are breakout trades. We don't go based off breakout trades. I mean, you can still make money doing breakout trades. Don't get me wrong. You can still make money, but you can get, faked out, or, you just have to keep your targets very narrow. Okay. So all you got to do is wait for price to come back into your S&D zone. Okay. So now that price comes back into your S&D zone, price comes into here and we reject. We're going to target this demand zone. Okay, that's if you go against the trend. But you have to be very careful, because if you get into the supply zone here, do not try to go for these lows here, these lows here, or just, even lower. See where you're sitting at. Remember this demand zone. Okay, this is why I say look at the other time frames. See what it's telling you. We already see that this right here broke structure. This gives an impulse move to the upside. Price is just coming right back down to tap in and then to see a run up. That's it. So let's look over here, the next updates. I kept updating this one. So look at this one, SPY updates. Levels are given, use them. There you go. So remember, we're talking about over here, broke below here, price came down, came up into the supply zone, came into supply zone, came here, rejected. You see when price came into the demand zone, what happened? If we zoom in, let's see if I can zoom in a little bit. So yeah, over here. So if I zoom in, what is price doing? Price is falling. Did a lower low, a lower high, a lower low. Price ran up, did a higher high. You see how that broke structure? When that broke structure, what do we do? Do you guys know what the next step is when that broke structure?
Pullback.
Yeah, pullback. The pullback, the retest, and the we don't go for the first break of a structure. We go for that retracement into this little demand zone. So now this is a little demand zone right here itself. We don't have to use this one no more. We can use this one right here. All we use is the demand zone is just to see how price reacts. So look how price reacts at the demand zone. Price ran up, broke that resistance, made a new high. Price came down into this demand zone. Look how price is reacting. It did a run up. And we're going to target this penguin right here, because that was the big sell-off right here, from here to here. That is your liquidity. Let's just say if it breaks above, this, your next target will be up here. That last high up there. So let's look at the update. Support resistance, just like supply and demand. No, it's not, because we use supply and demand zones for entries and exits, and we use it with unmitigated candles, and we're just using it where those buys and sells are at. Because I use support and resistance, just those lines, just to get the confirmation of just a break of a structure. So look at this. Look at SPY. That day, it just ran up, and you just see that's all we're really using is that 3-step rule, which is the structure is number 1. Remember, we're reading the story or the direction. 2 is you draw your demand zone. And when you draw your demand zone, remember demand zones mean, think of it like a trampoline. Price comes in that trampoline and you just bounce right back up. And there you go. If you play those cards right, hello to, say hello to 5 to 6 figures, easy. All you got to learn is that 3-step. All it takes is that 3-step, because everything here is just based off eye work and your brain, and that's it. Okay. There you go. So where would your alert entry, so where would your set your alert enter the trade towards the end of the demand zone 417? So I mean, I'm gonna set an alert around here before price comes into this level here. I want to get the alerts, and then once I get to alerts, I'm gonna see how price reacts into that demand zone, because you can see that this is calls at demand zone. So I'm gonna set an alert before price comes at demand zone. So when it gets close to it, there you go. Because we don't know, like I said, we don't know how deep price itself can, go into this demand zone. It can come into here, even lower, and run up. Maybe come down even lower like this and run up like this. All we're really doing is just waiting to see how price reacts into that demand zone. We don't know how deep it can go into that demand zone. Okay. I wish I could tell you, but like I said, we're just waiting. And this is why I say, if I throw out these charts in the chats or in the Discord, people are going to ask me, so what is entry? Where do you enter? I mean, I can't tell you. I mean, like I said, everyone has a different entry. Okay. Because remember, we're not here for breakout trades. We're here to get into what? The retracements into those demand levels, and then we go long. And if you enter at demand zones, take it to supply zones. Write that as a note. Buy your calls at demand zones and take it to supply levels. And when you buy puts at supply levels, you sell it at demand levels. Okay. Write that out. And then buy puts supply zone, take it to demand zone. There you go. Write that as a note. Okay. So let's look at the updates. There you go. Look at this. Look at that run up. That's all it took. That bounce off that demand zone with confirmations. And look at that run up. And that's it. We saw a continuation up, pull back, and then run up again. And it's going to come into this unmitigated area, because look at this. The banks, they did a full drop, and they're coming to close their positions right here, because that's an imbalance. Think of this right here like a gap. It's the same thing. Price comes up into this level here to close those positions. Okay. Because everywhere you see, look at this gap, or the imbalance. The only imbalance that we see here now on this little run up is now this one's left, because you can just see that this right here everything has been mitigated. This has been mitigated. This has been mitigated because price ran right back up into it. Look at this drop. Price runs right back up into this unmitigated level here, because that's a full imbalance. It fills it in. So now this is filled. This is filled. What's left is this right here. And now we saw the run up, the pullback. Look at this. This was imbalanced in here too. The run up, pullback, there's the demand zones here. And then we saw the run up. Okay. And you just see that's where this is just on a 1 minute charts. And you just see that structure is structure, and it works on any time frame. Nothing changes. Okay. So let's look at the updates. Look at this. This is the updates on SPY that day. Look at that run up. We just see the continuation up, and it's just, just all I got to do is just break structure, make new highs. This broke structure. Look at this one. This was the last lower high. Price broke above. This is a BOS. Price ran up, pulled back. As long as price does not, come below here, then it could still run up. Look at this. That is another breakthrough. That broke structure right there. Remember this resistance line here? that did a double break. BOS. BOS. Look at that. Remember, it has to do this. Break structure for it to continue going up. And now that it broke structure, it did a new high. We don't go for that break above. Look at this. If you go for that resistance break or just a break above, look how you get stopped out. Because look how many people are trying to play the breakouts, but it reverses right back down into them. And when it reverses right back down to them, they sell for a loss. This is why I don't recommend breakout trades. Okay, I don't recommend breakout trades. Because look at this, it broke above this resistance, it pulled back. Because someone might say, oh, calls above 420 or something, and then, you know, when it breaks above it, look how it consolidates and it runs right back down. And then when you sell it for a loss, it comes right back up. Has that happened to you guys?
Yes.
Yes. Yep. And like I said, breakout trades, you know, you got to be very careful. And, you know, when it comes to those signals, and, you know, even if it's my signal out, if I say break above this or break below this, just know that you can go for the momentum, as in the down run, and you get in and you get out. Or you can wait for that breakthrough of that new low and let price come right back up to you. That's it. Let the price come to you. That's it. That's pretty much what we got to do. Okay. So let's go on the updates. Look at this. SPY updated final price targets, and look at that run. We started over here. Over here, this was what, 417.69. It's all the way at 425. And all we really did is just used our what? Our three-step, which is the structure, the supply and demand zones, and then the confirmations. And look at the return that you could have got. Where is this coming to? This is coming into this imbalance here. Because these banks are coming up so they can close their positions right there. Okay. That is your supply. Okay. And now if I look at this, this is still what? Downtrending. And can you guys tell me, is this going to be a successful rejection? As in for puts? Yes or no?
Yes.
Yes, right? Can anybody tell me why would this be a successful rejection off of the supply zone? What pretty much catches your eye first? Just based off market structure, what catches your eye first? Yeah, there's not a higher low. I mean, we're bearish. Why? Because look at this. You see how this did a low here, a lower high, a lower low, a lower high, right? Price is coming to make an equal high, because remember, price can't break above here. If it breaks above here, then we're gonna run up. Okay. But just, you know, what confirmed this was this. You guys see it now? This broke structure right there. That broke structure and made a new low. We're going to target this low. Okay. 416. That's where we're going to target. Okay. Because that is the last low. And look how price came down, lower low, lower high, lower low. And you could just say this is equal lower high. And all this is doing is this. This broke structure, come right back up, and then come in to a supply zone, and then rejection. Okay. So now let's look at the update. So let me clear my screen. Now look at this. I told everybody that structure, S&D, and confirm. SPY calls was called out since the morning. It was a $10 move. And I was, it was just pretty much just updating that day. Okay. So look at this. Price is now what? It mitigated this. This right here, that was an imbalance. Look, remember this. This broke structure, came right back down, coming up to here, coming to here, and then what? I can already write this. So let me just this. So let me just draw it. I don't know, use that. Broke structure here. We have a new low here where we're going to target. Do you guys know what this is right here? This whole run up here. What is that? What would you call that?
Imbalance.
Imbalance, right? So all we're really doing is we're putting the pieces together. We're putting the pieces together to see why would this reject? Because we have the imbalance here, right? We have the imbalance here. We have the break of a structure here. We have liquidity down here. And then we have our supply zone here. And look at this. It's going to do this, drop, because that's unhealthy price action. You see how we put the story in place or put the pieces together and it tells us a story? And we're putting the structure and then the supply and demand zones and confirmations. Yes, there you go. This is how I look at these markets. Okay. And this is how I want you to look at it. And you're just using that 3-step. Like I said, you're gonna be a killer in these markets. You can, make GTA money. Okay. That's what I tell other people in the Discord. This is, like I said, this is what I teach my students. Or just people that do one-on-ones with me. And sometimes I do it in the market recaps, but I only have like 30 minutes on my end. I can't explain it all. Okay. And someone said it makes so much sense. Yeah. So now that price comes into that supply zone, what happened? It can get that rejection, but you can see that at the end of the day, what did these banks do? They closed it here. They closed it here. Why? Because they're going to sell on the after hours. Okay, they're going to sell at the after hours. They trap the people here. They're trying to go long, but the next day it's already down here. The banks, they wait till the end of the day to close it right here so they can sell their positions after hours or the next day. Okay. So someone said, what do you mean? So yeah, the banks, because remember the banks, it's what they move these markets and they push the price up so they can close their positions over here. Do not forget, they close their positions here. And then now they close their positions. Now they can go short. They can sell. That's it. I did not know about these banks. The banks, they take your money. Okay. So is that the imbalance that bankers pump supply zone? Yeah, with buy orders. Yeah, that's all banks right there. Who can move a market like this? Not me, not anybody else, not retail. That's the banks pushing it up. For what? So they can close their positions right here. That's why this is a supply zone. It's a supply zone because that's where the money is at. So they can go short. And yeah, to get the retailers in. Yeah, to get the retailers in and think of all these people buying it up, buying it up, buying it up. There's still people buying in here, buying it here, buying it here. And this is why I say play with the time frame. Do not just stick with one time frame. Look where you're sitting at. Yeah, liquidate them. Yeah. Let's just say you threw in 5K into here. Say bye to your 5K. You're gonna be negative 5K in the morning. You're done. You're gonna lose for a loss. That loss goes to who? To a smart money trader or to a bank. And look at this. I told everybody, SPY puts. I told them it's a risky swing, you know, to tell them it's a gamble. Okay. I said a 426 puts. 2 contracts light. And look, I sent that before the market closed. And look at how price is now reacting at that supply zone. There you go. That did a what? A breakthrough, come up here, drop. That's it. We're going to target these lows here. Okay. So let's look at the updates. Look at the after hours. This is the after hours. Look at this. That's a big drop. You see how they just sold off? They sold off a lot. And they're going to target all the liquidity here. Because people have trend line like this, and they're just buying here, buying here, buying here. And yeah, that's pretty much just, you can participate in those moves, but you have to be very careful. But yeah, there's a lot of money being bought at those support lines. Okay, like I said, we're not retail traders, we're smart money traders. We're going to come into here and we're going to target the people that are just buying and buying, buying here. Because we know that this is bearish. We know that how this played out, or that how this is playing out, and we're going to target the dumb money in the retail that has buys and buys and buys and buys down here at these circles. Because what do retail use? They use patterns, they use support and resistance, they use all that. They use trend lines. Where do they buy calls at, or where do they buy shares at support levels? You and I, or everybody in this group, are going to target these people down here. Okay. Let me just show you the updates. Look at this. So SPY and the day yesterday, swing is busting, trade the charts, not your feelings. Boom. Amazing, right? It's amazing. It's amazing. And it's pretty much, like I said, it's just that three-step. That three-step rule on, you know, what we go by is structure, supply and demands, and the confirmations. So now that you got puts into that supply zone, look, we're still going to target the liquidity down here. Okay. So this went from 429 and it's already at 422. All it takes is one trade. All it takes is one trade and you're done. And you should see that this was on a Monday to a Friday. You don't have to trade on Monday. You don't have to trade on a Tuesday. You don't have to trade on a Thursday. And yeah, you wait for the Thursday to come into here, you swing it and look on a Friday. You got your check. One trade, one stock, and that's it, you're done. And then over here, look at this. This is the last update. You see how this just came down and target that liquidity there. And look what happened. It's right there. From 429 to 414. I think it went lower. I think it went to 410 that day. So if I didn't update that one yet. So it went from 429 to 410. Isn't that an amazing move? So, yeah. All it takes, you know. So now let's look at a chart. Okay. Let's just see how that, you know, how we can apply this whole three-step based off the structure, the supply and demand zones, and its confirmation. Okay. So let's delete this. Okay. So this is Microsoft. We can just see that on this Microsoft. What is it doing? We see that's okay. This is how I approach this. We see that we had a big rundown here. This was a full rundown. I think that was based off COVID. That was a big drop. After that drop, we saw a run right back up. And then we saw the run right back up, and we started being what? Bullish. Bullish, 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 bullish. Okay. So all we really see is just what, higher highs and these higher lows. And remember, for it to continue going up, it has to break highs. So look at this, highs, broken highs, run up, broken highs, broken highs. It's like what? You're going up the stairs. And we just see bullish order flow like this. Run ups, run ups, run ups. Okay. So I pretty much just want to show you what happened based off of, I think on January 18th, or just the January, the month of January, and see how that consolidated a bit. Okay. And see how, everything just played out, and see, what happens. Okay. So all I know that's, I'm looking at this, it did a high here, higher low here, high here. And this is just a weekly chart, okay? And let's go play. So now what do we see? We see that price is now consolidating. I mean, it's losing, I guess you could say, pressure, buying pressure. Look at this. Now look at this. Now it's just falling and falling and falling. Let's go into a daily chart. And that's what we see, okay? We saw that price was falling here, and then it saw a big of a run up. So now that we saw a big of a run up, let's dive into here. Can you tell me what phase are we in here? In the chat.
Consolidation.
Consolidation, correct. A range, yes, a range of consolidation. That's what we're going through. And this is where people lose money at. But you and everybody in this chat, we're not. We know what's going on. Because if I pull up this, okay, this is how the market moves. We accumulate, it accumulates buys, reaccumulates, but just know that it's all a markup. It's all a markup. And then after that markup, what happens? It distributes. We can't run forever. We need to come right back down to capture liquidity. We need to come down and capture liquidity, and we can see the run right back up. So everything that you see here is just based off Wyckoff semantics of market action. We see the accumulation. Accumulation means what? It's bringing in buys, the buy orders, but just know that there's still people losing inside of this accumulation phase. So when it does this, it's just buying and selling, buying and selling, buying and selling. But it does what? An accumulation phase. And then when it runs out of the accumulation phase, it does a reaccumulation. This is just what we saw on Microsoft. Remember, it was just uptrending like this. But then when it was uptrending, it started doing this range. And after the range, it just drops. And look at this. Consolidation, which is accumulation. It brings in buy orders. So long-term investors, smart money, banks, or whatever, they want to buy in here. And then what? They run it up, run it up, run it up. Consolidate, consolidate here. That's a reaccumulation. And then it runs up. Now, what are these banks going to do? They're going to take their money, they're going to take their profits, and what? They're going to buy it right back up, right back down into an accumulation phase. This is how the market moves based off the Wyckoff of the market action. So what is Microsoft doing here? So let me put into this, so let me fill that in with candles. And you can see it right there. You see this, all this right here is forming, just like the way we saw here. It's forming, right? There you go. Now price is distributing here. And what is this doing? This is doing a rundown, a rundown, a rundown. You see how buying is, looking weak. So let me just exit out all these screens here. So there you go. What do we see here? We see that this did a high based on candlestick structure, high, low, high. Can you guys tell me what this is right here? This candle here. Or what did it do?
It pushed up and then sold off a lot.
Yes, it sold off. I mean, that was a strong rejection, correct? That was a big rejection off that area. So that has to catch your eye, okay? And that closed on a daily chart, on a daily candle. Remember, we're here to read the bigger picture to see, what's going on. Okay. So now that, price did a high, low, higher, low, high, price just dropped here. Okay. So we can do this. Higher, high. But with that higher high, I don't like it. Got that strong rejection. And what happened?
Lower low.
Correct. Lower low. That was a big rejection and it made a lower low. Lower low. And now what do we see? We see the change of character. We see structure breaking. Okay. And remember, this is just going based off of daily charts. Think of how a 1 hour chart would look like. Think how a 5 minute chart would look like. A lot of noise. But this is just me going off of daily charts. So higher high, higher low, higher high, lower low. And where does price come up to? Do you guys know where price is going to come up to?
Supply zone.
Supply zone. It comes into supply zone. It comes into this area here because it has what? What makes this supply zone valid?
The sell off after
Yeah, the sell off. And then what does it leave behind?
liquidation.
The imbalance. The imbalance. And what are these banks doing? They're pushing the price right back up so they can close. When you think about it, the banks, they don't want to sell here. They don't want to sell here. They want to try to sell at the best price. So you can just see that is the cause. So they did the first drop right there. First drop, that's one. But now that price comes right back up, they can sell it again. They can sell it again at the same price they sold it off. Think of how many people are buying on these bullish candles. Think of how many people are buying and buying and buying and buying. Thinking, oh, we're gonna see the moon again. Think of how a 5 minute chart will look like. Think of how a 1 minute chart will look like, or just think how a lower time frame will look like. Bullish, 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 bullish. That is your supply zone. That is your supply zone. Price comes up into that supply zone and look at the reaction. The reaction is there. So now that price came into that supply zone, what did it do now?
Sell off.
Sell off. And just look at the momentum. Look at the sell orders. Look at the selling pressure. That's a lot. And I'm not using any indicators. I'm just using price action. I'm just using the structure. And I'm applying the S and D zones. Because all I'm looking at was the higher highs, higher lows, higher highs. And then what's the shift? The shift from being bullish to, going to bearish. Okay. So now that price made a new low here, price came up to here, and now that price failed to break above this. Okay. Price failed to break above that line. And now that it failed to break above that line, you can see that's what we're pretty much bearish. Let's hide this, or let's hide this. Look at that. Look at the highs. It gets lower and lower and lower. You see how these banks are, they're trying to sell at the same price? Equal, right? That's equal. But just know that, look, lower lows. lower lows, downtrending, downtrending, downtrending. This is how we read the bigger picture. And now when you read the bigger picture, now you can work your way down into the time frames. And now the time frames, you go from a weekly or whatever that time frame you want to go from the weekly and dive yourself into the lower time frames. It's like reading a book. Okay. Does this all making sense though? If so, just, say yes. Yes. Perfect. Yeah, I just wanted to make sure you guys following along. Yeah. So let's go to, look at this. So now that price came to the supply zone, price fell and made what? A new lower low. This broke this structure here. So where is my breaker structure? Structure there. That broke structure there. And then what is price doing? Coming right back up into the supply zone right there. You see how we don't have to use this one no more? We don't need it, but I'm gonna just leave it there in case, or just, just leave it there. But look at this. Price came up to here and look at that rejection. It came into that supply zone. Do you know why did it came into that supply zone? What did it have on that down run? What did it have?
Imbalance.
The imbalance, correct. That's a full imbalance. Bingo, imbalance. When price came into that imbalance, look at the rejection. Now that we saw the rejection, what happened? It got that sell-off. Look at the selling pressure. All we're really doing is what? Is just, flow with the wave. That's it. If you flow with the wave, if you flow with the banks, yeah, we just need a little percent, just need a little cut. And that's it. Because this is just doing this. Downtrending, downfalling. And this is just what? On a daily time frame. We're not even on a 4-hour time frame. We're not even on a 1-hour time frame. Because we're only looking and reading the story. We're seeing in the direction. And you could have captured this whole downfall and swung two months and 3 months out puts. Look at that. We're seeing the change from the bigger picture, the change from a bullish run to a bearish. And we can target all the liquidity that's sitting on these bottoms here. Okay. So now that we see that, we have imbalance in here. We have the imbalance here. Okay. And all is doing this. Look at that fall. If you took puts from here, look at all that. That's just down falling. Because what is all this? This is this. All this right here, accumulation, reaccumulation, distribution, redistribution, you can spot that on any time frame. I guarantee you can spot it on any time frame. You can spot it on the daily. You can spot it on 4-hour, 1 hour, 30 minutes, 5 minutes, 1 minute, nothing changes. You can spot it on any time frame. This is just how the market moves, okay, based off the market action, okay? And also Wyckoff. Wyckoff, you can see it on any time frame. You can spot it on 1 minute. You can even spot it on 30-second charts, 5-second charts. I tested it. I tried it out. You can see Wyckoff on a 1 hour. You can see it on a daily, There you go. This is just pretty much how this is just downtrending, downtrending, downtrending. So let's look at SPY. So with SPY, same thing. What happened? I mean, I think I already talked about this in the webinar. I'm not going to go fully in detail because you can watch it in the webinar on yesterday's. Did anybody watch the webinar yesterday? Yes. Yeah, perfect. So let me go on AMD. So let's go on AMD. Let's look on a weekly chart, or let's just look at a monthly chart. Actually, a weekly. So yeah, same thing here. What do we see? A run up, a pullback, a run up, and then what? A pullback. We saw a downfall. All this is just downtrending, downtrending, downtrending. And what do we see? We can see that's, I can draw a demand zone here, but, something that, I don't really need to do that. I can just see how price can just reverse inside of here without looking at this demand zone. But yeah, that's still validated. That's how price just ran up. But look at this, that's a demand zone, okay? That is the demand zone off this weekly charts. Off the weekly. This gives what? Bullish, 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 bullish. But what happened here? What is this? What is that blue box area? What would you call that?
Imbalance.
Imbalance, correct. That's imbalance. Price is going to come right back down until we see that confirmation right here. Then we can target that imbalance if you want to. All we really need to do is find how this is going to reverse on what time frame. On a lower time frame. Since this is a weekly, what are we going to do? We're going to jump onto a daily, or we're going to jump onto an hourly. So since this is a weekly charts, I need to dissect those candles. Let me open up those candles here and see how that reversed, or why did it reverse? But just know that we already found a demand zone here, and that's the reason why price, ran right back up. And yeah. So let's go on a daily. Look at this. So where is my no gap indicator? Did that remove? I think that removed. So let me try to find it. So I think that removed. And let's dive into this. Let's go into the daily again. So look at this. So what happened? We saw the run up. We saw that all this is in balance. And we can see that's what is this doing? Higher lows, higher lows, higher lows. Price just broke through. When price just broke through, what would you say? What is that? When price just breaks through a low. Or the higher low, what would you call that?
Break of structure.
Breaks of a structure, correct. That's a break of a structure. And all this right here from this point to here, that is the cause of that breakthrough. But what does it have on this down run? What does it have? Where is price going to target? Or where's that run up going to target on this downfall? It's going to target this imbalance here. Because remember, it's a gap. This right here is a gap. That's an imbalance. Imbalance, and what do these banks do? They come right back up and mitigate those areas. And when it comes in those areas, price drops. Okay. They close their order, they close their positions because what? They're going to go short. Okay. That is a break of a structure. And there you go. It comes into that imbalance. And you can just see that's what happens in that imbalance. It gets that rejection. Do you see any imbalance up here? No, you did not. The only imbalance you see here, that's where price just stopped at. Right here, got rejected. Okay. And all this really doing was what? Lows, lows, and lows. Lower lows, lower lows, lower lows, lower lows. That's it. So let's go on to this time frame here. Now we're into a 3-hour chart, and you can see that's what happened. You can participate in these lows and run it up into that imbalance. We can still move this up here. It still closes. Look at this. It still closes. So what is this doing? On the lower time frame, it's going to tell you a different story. Lower low, lower high, lower low, break structure right there. That broke structure came right back down into a demand zone right here, and we saw the run right back up. But don't forget how the higher time frame looks. Remember, we're bearish. The strong low has been broken on the bigger picture, but on the lower picture, it's going to tell you something different. Okay, so right now we're going against the trend. Okay, we're going against the trend, but this is how we can participate in that run up. Because you got to think about it. The market is not going to just fully fall all day, every day. The price action or just market structure, it moves in waves. Remember, people have to lose for, once a game. And you guys see how market structure is very important? If so, type in yes. Because you can just see that when you learn, when you're studying market structure and just you apply that into the charts, you can see everything. You can see what's going on. Okay, you can see what's going on inside of that imbalance or inside of this smaller structure or on a lower time frame. Because we already know that what happened on the bigger time frame, this right here has been broken. It broke structure and it runs right back up into that imbalance. Okay, and then it mitigates this, it closes positions, and it runs right back down. So now that we see that run right back down, what do we see? We see that this was uptrending. So this was a high, this was a high. It made a new high, but what happened? Broke below. What is this? Can you guys tell me what happened here? Break of a structure, correct. That is a break of a structure. That is a break of a structure. And then we don't go for the break below. We don't go for this. All this right here, it just confirms our setup. That's it. That confirms our 3-box rule. Meaning, what is our 3-box rule? It's the cause of the last up candle before the down move. That's that. We do this from that up candle to this new low. And we grab the last up, and that is our supply. So remember, structure. That's it. The yellow is number 1 because that set up our system, or that set up our 3-box. That's 1. This is 2, and this is 3. Okay. Because you can just see that if I put this on the line graph, that is a break of a structure. You see how these lows has been broken? These lows been broken, and then now this confirmed that this is break of structure, and we can continue running it down. This is how we can participate on that downfall. There you go. Price comes right back up. Why does it come right back up into the supply zone? Because it has unmitigated levels here. That's all imbalance. That's a gap. It's the same thing what you'll see in gaps in the markets. It's the same thing like right here, the gap right here. That's an imbalance. So now that price comes up into that imbalance, that supply zone, you see that rejection right in that supply zone, taps in, reject. And all we got to do is just insert. Bingo. There you go. That's it. We're using our 3 steps. So let's just say that if you're in this move and you took it all the way down here, look what happened. Broke that low. What happens when it breaks a low? What's going to happen? You guys know what happens when it breaks it makes a new low? What's going to happen?
Continuation to the downside?
Yeah, continuation to the downside, but first it's just going to retrace, correct? It's going to retrace first before it continues to the downside. Because it can't just, remember, it can't just fall down, fall down, fall down. It's going to have to come right back up and collect more money. Collect more money as in people are losing money on this little impulse move to the upside. Because remember, we can't just, we need money for it to run right back down, okay? I wish, it just falls like this, consistently, every day. I'll be buying puts. Everybody be getting rich off puts every day. But like I said, the market moves in waves, okay? So now that this dropped, what happened? This broke structure, right there. So let me delete that. So let me delete this. Let me make it better. That broke structure. Let me make that broke structure. There you go. So now that broke structure, price came right back up into that last up candle before the down move, which is here. Why did I select those two? Because that was pretty much, that's where they bought before they sold off. Because that's pretty much, I'm gonna just connect those, because if I put on a 4 hour, that's gonna be connected. It's gonna be connected together. It's pretty much the same thing. So I'll pretty much just, add those two. Okay. Because it's the last up candle before the up move. Okay. So if you guys want to write a note on how to draw supply demand zones. So for supply zones, it's the last bullish candle. And before that impulse move to the downside. And then for demand zones, it's the last down candle before the impulse move to the upside. And this is the supply zone. You see how this was the last up bullish candle before they sold off. Price runs right back up into that supply zone so they can go short again. Okay. Same thing over here. Let me clone this. That has been broken. You see how that's been broken? The last up, which is right here. Look how price comes right back up into that supply zone and goes short. Oops. You see how we can participate on that down run? Someone said, can you repeat that? Repeat the supply and demand zones. Yeah, so let me just draw it out for you. I'll make it red. Yeah, that's already red. Oops. That is your demand zone. So it's the last down candle before the up move. It's the bearish candle. Okay. That's demand zone. And then the opposite is this. Oops, I think I moved the other one. But yeah. There you go. So demand zone is the last bearish candle before the up move. There you go, that demand zone. And then the supply zone is the last up, the last bullish candle before the down move. Okay. That is your supply and that's your demand zone. And that's what we see here. Since this is downtrending, what's more effective? What's more effective on this downfall is what? You guys tell me what's more effective? Supply or demand zone?
Why?
Supply, correct? That's supply. Supply zone is more correct. It's more effective. Why? Because we're downtrending. We're trying to sell. That's it. And does anyone have any questions? I've been talking a lot, I believe.
I do.
Yeah, go for it.
So when you're in a downtrend, you're looking for mainly supply zones until you reach the main demand zone.
Yeah, so the main demand zones, all we're really doing is just flowing with the wave. We're flowing with the structure. Until we see the reversal, then we can, look for the reversal. But other than that, if this is going to continue on breaking lows and lows and lows, then, we're going to keep on, buying puts at supply zones. Because so think of this whole this whole distribution, like, you know, when you reach a mountain on the top. So I don't think you jump off the cliff and go back to your car. It's gonna, you know, it's gonna take some time going back to your car. It's gonna be the trip, right? And that's it. Look at this. It's like the mountain, right? You climb up the mountain when you reach the peak, and then when you reach the peak, you want to come down, but it's gonna take some time. It's gonna be pretty much the same way as you came up. But when you're coming down, supply, supply, supply. All you're really doing is just flowing with, you know, the wave as in you're going down. All it has to do to confirm the downtrend or just to continue, it has to break lows.
Thank you.
Yeah, no problem. And look at this. I mean, what is all this? I know there's imbalance here, but you might be wondering, why did not price come into the supply zone here? I mean, sometimes it might not even come into a supply zone here. I mean, if it doesn't, it doesn't, you know, it's normal. I mean, sometimes I have demand zones like this, and I have like a demand zone here, but price comes down like this, but it misses it. It does not hit my demand zone. And if it misses my demand zone, that's okay. Even by a hairline, if it misses it, I'm not entering. Same thing would go to supply zone. So let's just say this right here broke low, broke low. Look at this, price came up and it did not come into a supply zone up here. That's okay. Just be patient. Let the trade come to you. Find a new setup, okay? Because you might be having supply zones up here, here, here. If it doesn't hit it, then, you know, it doesn't hit it. You know, we can find new ones. It's all about being patient. Look at this one. If this did not come into here, what happened? It did not hit it. It just dropped even further. All we're really doing is just flowing with the wave. There's a supply zone right here. Why is that a supply zone? Because that broke structure right here. That did a new low. When that did a new low, it came to here and it got rejected. It got rejected. There's liquidity here. We're going to target that and we can go short. There you go. That just fell. Okay, that fell. And then, like I said, this is all you need is that 1, 2, and 3 step, which is structure, supply and demand zones, and then the confirmations. So now that price just broke below here. And when it comes to here, look at this. It got rejected. Okay. So now that it got rejected, we're going to target that liquidity point right here. And then it just falls and falls and falls. Okay. And like I said, all we're really doing is just flowing with the wave. That's it. Okay. And so let's go back onto weekly charts. Remember this demand zone that we first pointed out on that off that weekly. Look at the reaction that we had here. Okay, so let me see, that was May 2nd. Let me check the monthly. Yeah, the monthly, the weekly looks good. Let's go into the daily. Yeah, so let's see over here. Okay. So off his daily charts, price comes down into that demand zone. Now that price comes at demand zone, what are we waiting for? We're waiting to see how price reacts into this level. And like I said, when it comes to demand zones, we don't know how deep it can go to. It can come here and come up, come here and come up, or come here and come up. All we're really waiting is to see when are we going to get that confirmation. Okay. So now that we see this, what do we see? This is on a daily chart. We see that this can be a lower high. All this right here can be a lower high. Okay. That can be a lower high there. And we just waiting to see if price runs up. Okay. So let's just say that this is our lower high right here, which it is. So let's just see if price breaks above. Bingo. It breaks above. So now that it breaks above, what can we look for? We can look for calls. we can look how we can participate in this area here. Okay. So now that's a big run up. Since that's a big run up, let's just put a no gap. We saw that price just did what? Can you guys tell me what happened here? Can you tell me what happened in the demand zone?
Rejected.
It rejected, and what happened on this resistance that we had here?
Break a structure.
Break a structure. Now that broke structure, now I'm gonna wait for price to come back into my level. This is still on a daily time frame. Okay, let's just say I'm a swing trader. I'll have my demand zone here. I don't need to use this blue one no more. I mean, we can still leave it there, but we have a new demand zone inside of demand zone. So let me just make that green. So let's just say that's, let's just see if price comes back down into this level here. We already established its new high on May 4th. When was May 4th? That was, the beginning of May 4th, on a Wednesday. Yeah, on Wednesday, beginning of that. And let's just see how price comes back down into that level there. There you go. It taps in. And when it taps in, we already had a confirmation of what? This breakthrough, this broke structure here. This broke structure here. And we're going to target that liquidity right there. Okay. So let me remove that no gap. And there you go. Price comes down to here. It mitigates. It comes down. And what? These banks are going to start buying. Okay. So now that we have our demand zone there, let's just see how price reacts. Bingo. There you go. Now what do we have? We have a big run up. That broke structure. Okay. So now that broke structure, we can just see that now this right here cannot go below this here. If it does, it can either do a liquidity grab and run up, or it can just come here and back into the demand zone and run up. Okay. So like I said, the candle can't close below this wick here. If it does, then that's a break of a structure. Okay. So let's just have our level here. So we have that level there, and we already know that this broke structure, and we know we're bullish. And then, let's see what happens. So this right here, broke structure. This right here broke another structure. There. And then we're just waiting to see if price comes right back down into our demand zone. There you go. Taps in. It taps back into the demand zone. So you can see that's where is the area that caused this to break structure. Where is that imbalance? The imbalance is right here. So now that this right here broke structure, the banks are going to bring it right back down to mitigate this. So they can mitigate that. This is our confirmation. Don't forget, all this right here is our confirmation inside that demand zone off that weekly time frame. But all I can see, even without this weekly time frame, I can already spot this: higher highs, higher low, higher high. There you go. Because if you think about it, if I go onto a line graph, can you guys see that this is uptrending, 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 and uptrending? This is just running up, running up, running up. And this is what happened this week on that run up. And this is just me off of daily charts. And then that price did low. It did a higher high, a higher low, a higher high. And that's how we ended up. That's how we ended that day. Okay, that's how we ended the day. Where did it close? It closed right at that last high right there. Did not break structure yet. It's still there. This can still come to here and reject. Or let's just say on the next week, if it breaks above here, if it breaks above there, we can have demand zones down here, right at this level here. And I'm giving you the setup what can happen for this following week. Price can run right back down and then run up. Just know that this is uptrending, uptrending, uptrending. Okay. And do you guys see it now? Are you guys seeing how everything works? Seeing how, you know, how we go from bearish to bullish on how every time frame plays out, how we can read the story, read the structure, use supply and demand zones, use the confirmations, and yeah, I mean, you know, someone said clear as glass. Yes, yes, yes. It's very good, very good. Yeah, I mean, this is, you know, it's what I do. Is when I teach, I like to break everything down, you know, into detail, and just, you know, making sure you guys are following along. That's it. You know, let's see how all this plays out on a lower time frame. Let's go on a 1 hour, and there you go. Same thing. We can just see that. What is all this? All this is what? Accumulation. This is accumulation, what we see here. We can just see if this continues on running up, we can just see the markup phase and reaccumulates and then distribute all over again. This is how we move. Okay. So let's just say that's okay. On a different picture, you might see that this right here came all the way back down to here. Let's just see how this right here shifted from bearish to bullish again. So let's go on to a 1 minute chart. And let me just show you in a 1 minute chart. So actually, let's do on 5 minute charts. I think that's too much noise. Let's delete this. Let's just forget all of that. So what happened here? So you see how this whole sold off here? Low. Did price ever come back into this low here? You have low, price runs up, this breaks structure, right? That's a change of character from bearish back to bullish. Price runs up, comes down. Where does it come down to? It comes down into a S&D zone. So all right now, it's just, I'm seeing that, you know, we're still, remember, we're still in that demand zone, but I just deleted it. I deleted it, but I'm just showing you how this looks like on a 5 minutes or 1 minute and how you can day trade this or how you can get that sniper entry. And this is what I see. Low, lower high, low, price runs up, pulls back, and then runs up again. This did what? The change of character. All this right here is what? This is just, it's failing to make a high at the moment because it wants to come right back down to mitigate and come into that demand zone down here. So now that we have a demand zone there, I can already spot how we can enter into here. So all this right here is accumulation, because this is a demand zone off the 5 minutes. So let's just say demand zone off a 5 minutes. And I'm going to show you how this plays out on a 1 minute. So delete that, delete that, delete that. So all I know that's a demand zone off the 5 minutes, because look at that. That's a breakthrough. That's a big run up. Let's look at the volume indicator. Let's see how much buying pressure that is. That's a lot of buying. Look, all that buying, that's a big buying order. Okay. But I'm just waiting for price to come down into the cause of that run up. Price comes down into this level. It did not break below that wick. It's still holding. Look at how the candles close. And let's jump into a 1 minute chart. Where'd it go? Right here. Look at this. So you tell me, this accumulation right here looks just like a white cloth. This right here. it looks the same thing. Wyckoff. Wyckoff is a weak hand to strong hand transfer, and you can use Wyckoff as a method for your confirmation entries. And like I said, you can just see that you can use this on any time frame. You can use on 5 minute, 1 minute, 30 minutes, 1 hour. But I'm only going to use Wyckoff or the accumulation inside of a demand zone. This is a demand zone. You can just see how everything just, plays out. Because you can just see that selling pressure, what happens? It does what? It stops here, does a PS, comes down to here, the SE, the automatic rally, the ST, the spring, and then what? That run up. Honestly, like I said, you don't need to learn all this, but if you want to learn it, then go for it. All right. But you can see that all this right here is lows, 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 run ups. You can just see that big of a run up, what happens? It breaks structure. You see how all this right here, it breaks structure, comes up, comes down. Where does it come down to? It comes down into a demand zone. Okay. That demand zone is right here. Right there. That is your demand zone. Run up, that broke structure. You can put this on a line graph. Look at that broke structure. We don't go for the first break. We go for the pullback. The pullback inside your S&D zone. Okay. That is your first structural break. That creates your setup. The high, the higher low, the new high. There you go. We see buyers in control. If you don't want to go for the first, or if you don't want to go for the first entry or the first break, wait for the next one. There's always entries. You can always get into an entry, here, second entry here, the third entry here, whatever you want to do. There's always room to enter. All right. So look at this. This came right back down, and it came into this level here. Why? Because it had an imbalance. Okay. It had the imbalance there. It had that imbalance. Price came down, mitigated that imbalance, ran up again. When it ran up again, what happened? It broke structure. So now that it broke structure, you see that run right back down. Where does it run back down to? It runs right back down into this demand zone here. You can already see you got what? Multiple entries off of this. You see how we need that momentum for our, our setup to take place, for us to find entries and exits. And that's it. There you go. Look at that run up. That's it. We're only focusing on this right here, just this whole box. But you can just see, look at this. Look at that run down. You see that run down? You can participate on that run down. Because what is this telling you? Bearish, 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 bearish on a very, very low time frame. Look at this. We know that this had a big buy in order, but look how price is now dropping. Lows, lows, lows. A big drop. That's a full imbalance. And this is the last up. That's your supply zone. Price comes down, comes up, because what did this do? Break structure. Break structure, comes into here. Look at the reaction. You see how it comes right back down? There you go. You can participate in these two, in calls and puts. The market is fractal. But yeah, this is just how everything plays out. This is how you can find entries at supply and demand zones. Okay. So now that price came to the supply zone, look at that fall. I mean, you can participate in that fall if you like to. All this right here is what? Liquidity. We already know that this is, slightly bearish, but look how what happened. The main objective was to go long. But you can just see how you can go against the trend. Just like the way we saw on Discord. All this right here, it's the same thing. It's the same thing. Nothing changes. It's the same exact thing. Look what happens when it came to that demand zone. The reaction. Yeah. Yeah. But yeah, how did you guys like this session though? Do you guys love it? Did you guys learn something? And yeah, it's just a lot of information, a lot of gems. And this is just, pretty much the system that I go by. Structure, ES&D, and the confirmation. Learned a lot. Can't wait to apply it. Yeah. I'm glad you guys, everybody attended. Just kept it trying to, kept it really small. I could have, continued going on, but Saturday night. But then that's, I just want to say thank you for everyone that attended and everybody that booked. But if you want a one-on-one, or if you want to learn more, then you know where to contact me. And yeah, I mean, I tried my best to put all the pieces together and just show you everything that I know. And I hope you guys absorb all the knowledge. You guys will have this recording available. I'll have to upload it into my Google Drive, and that link will be sent out via email. But yeah, thank you everybody that attended again. And yeah, I hope you guys learned something. But yeah, that Google Drive link will be attached into an email, and I'll send it to everybody, okay, that attended. Okay. Yeah, it was a nice session, right? Yeah. Thank you. You guys have a good rest of your weekend. Thank you again, and you guys stay safe. And yeah, we'll talk next week. Okay. Thank you. All right. Bye-bye. You will be a sniper. Yep, you'll be a sniper. All right. You guys have a good rest of your weekend. All right. Bye.